Starting at the end of 2024, something unprecedented and extreme may happen in the global financial markets. Some investors who hold gold futures contracts will no longer want to settle their positions in US dollars. Instead, they will demand physical gold as payment. This shift could trigger a significant change in the gold market, particularly at the New York Mercantile Exchange, which is one of the key global hubs for gold trading. If the availability of physical gold on NYX decreases dramatically, it could undermine America's ability to control gold pricing. A scenario with potentially disastrous consequences for the US economy. It would be nothing short of a financial catastrophe. Currently, US Treasury bonds are considered the safest, most reliable, and most liquid assets in the world. The total market value of US Treasury bonds is approximately $36 trillion. However, here's where things get interesting. The global market value of all physical gold is estimated to be around $25 trillion, based on a price of $3,300 per ounce. Now imagine if the price of physical gold keeps rising. At some point, the total value of the world's physical gold could surpass the total value of US Treasury bonds. This scenario could reshape the hierarchy of global financial assets. It's challenging the dominance of US debt instruments and shifting investor preference toward gold. Let's break down some numbers. Of the $25 trillion worth of physical gold in the world, only about 22%, roughly $5.5 trillion, is circulating in the form of gold bars and coins. This represents the gold that is readily available for trading or investment purposes. Here's the shocking part. The total value of non-physical gold products traded globally, such as gold derivatives, futures contracts, and ETFs, is estimated to be a staggering $300 trillion. In other words, out of the $300 trillion worth of gold-related financial products in circulation, jaw-dropping $294.5 trillion is essentially paper gold. Representations of gold that don't actually exist as physical assets. More investors start demanding physical gold instead of settling transactions with paper gold or US dollars. The system could face a severe reckoning. It would expose just how much of the gold market is built on financial instruments rather than tangible metal. Such a shift could have far-reaching consequences for global markets, potentially destabilizing the US economy and altering the dynamics of international finance. What does this potential shift mean for the future of global finance? Could physical gold challenge the dominance of the US dollar and treasury bonds? And if so, how can investors and everyday people prepare for such a seismic change? Subscribe to this channel to stay informed.